So in this video today, we are going to be comparing the two robo investing platforms out there known as Betterment and M1 Finance. And at the end of this video, if you guys do decide that you want to sign up for an account with either Betterment or M1 Finance, I am affiliated with both of them, which means if you do decide to use my links in the description at no additional cost to you, I earn a small commission in the process. It is certainly not required, but it is very much appreciated as it's a way to give back to me for putting a video like this together. And the one other thing I want to mention, M1 Finance is my #1 pick here for beginners in terms of a free investing platform, but it is a little bit confusing to get started with it. So I ended up putting together a completely free 30-minute video tutorial teaching you how to use the M1 Finance investing app. That is also linked up down in the description below if you do decide that you want to pursue that and learn more about this platform. But that being said, right off the bat, one of the biggest differences between Betterment and M1 Finance is the fact that Betterment does charge a small fee for the service, while M1 Finance is 100% free. Now, M1 Finance does make money. They're not, a charity, and there's a couple ways they're making money on the back end. For example, they have their M1 Finance checking account and debit card that has an annual fee. They also make money from the cash held within brokerage accounts as far as interest goes, and they also make money from directing order flow. So those things are kind of confusing, not something we're going to get into in this video, but just understand they are making money, but just in some slightly different ways. Betterment, the primary way they're making money is charging a small annual asset management fee to customers, which is 0.25% for most people for the Betterment digital account. Or if you are a higher net worth investor and you have over $100,000 with them, they offer Betterment Premium, which gives you access to a team of financial advisors. Basically, at any point in time, you can reach out to them, and that has an annual asset management fee of 0.4%. Now, when you compare that to a traditional financial advisor who usually charges a 1% fee, Betterment is still very inexpensive for that type of money management. Another key difference here is the minimum amount of money to get started. So with Betterment, it is a $0 minimum. You could literally open up an account with 20 bucks if you wanted to. Whereas with M1 Finance, they have a $100 minimum for your traditional brokerage account and a $500 minimum for their retirement account. You can do retirement accounts with both Betterment and M1 Finance. You may find a greater selection of account types with Betterment. For example, like trust accounts, I think that Betterment offers those. You don't find those with M1 Finance. Another key difference here is that with Betterment, they are building you a custom portfolio based on your investing needs. So when you go on the Betterment website and you start investing, you're going to fill out a questionnaire where you talk about where you are at in your life, how much money do you have, what are your investing goals, and based on all of that, Betterment is going to build a custom tailored portfolio for you consisting of stocks and bonds and ETFs, exchange traded funds. There's no individual stocks with Betterment. It's only going to be passive ETF investing, and they're going to build that portfolio for you. With M1 Finance, you can follow a do-it-yourself approach or a portfolio-based approach. They give both of those options there. If you want to pick your stocks and you want to pick the ETFs you're investing in, you can do that through the platform and build your own portfolio from scratch. Or if you want to let them do all that hard work for you, they offer over 30 different expert-built portfolios, which again are going to be completely free. That means M1 Finance is not charging you for that. The only difference being those are more one-size-fits-all portfolios, and they're not going to be built specifically for your investing needs. Another big difference here is that Betterment offers a feature called tax loss harvesting. Now that in and of itself is a pretty confusing subject. I'm not going to go crazy into detail, but essentially what they're able to do is they're able to sell an investment and buy almost the identical type of investment to recognize like an artificial tax loss to cut down on your tax bill at the end of the year by recognizing a capital loss. And that is actually a way that Betterment has been able to justify that fee that they're charging customers, because they're actually saving you money on taxes through this feature called tax loss harvesting. And that's not something that is offered by M1 Finance. So that becomes more important as you're investing more and more money. So if you are somebody who's looking to put, let's say, $10,000 or 20 grand into an account like this, you really want to read up on this tax loss harvesting feature and kind of begin to understand how much money is that really saving you, and is that making Betterment a more cost-effective choice. Another difference here is that, again, you can buy individual stocks on M1 Finance. You will not find that with Betterment. You will only find ETFs. So Betterment is a 100% passive approach. You don't do anything. You don't tell them, what you want to invest in. You don't pick ETFs. You literally just fill out this questionnaire, and then you give them your initial deposit, and then you continue to deposit money on a regular basis. And other than that, you don't do anything. They're going to reallocate and rebalance that portfolio for you and handle everything else. With M1 Finance, you can follow a passive or active approach. If you want to passively invest in some of their expert pies or portfolios, you can do so. Or if you want to be more active with your selection and pick your stocks and your ETFs, you can do that with the custom pies option with this brokerage. Another difference here is that Betterment offers a option for your cash reserve. So Betterment has something called Betterment Everyday Cash Reserve, and that is specifically meant for the cash that you're not looking to invest. Now, the APY of this account changes with the market rate. I believe as of making this video, it's 2.04% APY, which is actually significantly higher than some of the competitors like Ally Bank, for example. So it's actually a very good online savings account. And the good news is you don't need to use that Betterment for your investments in order to put your savings with them. So you can keep your cash with Betterment in this online savings account without being an investor with them if you want to do that. Unfortunately, at this time, M1 Finance does not have any type of product for your cash savings. So that is one area where Betterment is stronger. But again, you could have your cash with Betterment and your investments with M1 Finance if you wanted to do that. So overall, this is what I would say about Betterment and M1 Finance. If you're looking for a 100% hands-off approach where you literally don't have to do anything, you don't have to look at portfolios, you don't have to rebalance or worry about anything like that, that is exactly what Betterment is for. It's 100% hands-off. They do all of the guidance, and it's completely beginner friendly. It is the simplest platform out there, in my opinion, to begin investing with. Now, on the other hand, if you know a little bit more than the average Joe, or you want to, learn a little bit, and again, my free training on M1 Finance shows you basically everything you need to know to get started, then this is going to be a good platform for somebody who wants to be a little bit more involved, where they're okay with selecting a portfolio to invest in, or they want to follow that do-it-yourself approach and pick the stocks and ETFs to invest in. It's also good for people who are looking for individual stock exposure, but it's not good for trading stocks. So if you're looking to trade in and out of stocks on a weekly or daily basis, it is not a platform for active traders. It is a better platform for people who are long-term investors. So overall, Betterment is more beginner-friendly, 100% hands-off approach, and M1 Finance is good for a more intermediate, beginner to intermediate investor who wants to be a little bit more hands-on. But anyways, guys, that's going to wrap up this video. That's the differences between Betterment and M1 Finance. If you guys are looking to sign up for either one of them, all of those resources are down in the description below. I certainly do appreciate your use of those links. And I also have that free 30-minute video training walking you through step-by-step how to use M1 Finance. But thanks so much for watching this video. I hope you enjoyed it, and I will see you in the next one.